Hello, investors and traders out there. ARK Invest just put out a price target for Tesla. They believe that the stock will go up 2 to 6 times from current prices, pegging a $560 to $1,200 price target on Tesla shares by 2023. They have shared their valuation model, and in this video, we are going to do the math using ARK Invest model to calculate how much they believe Tesla shares are going to be worth in the future. ARK Invest states that even if full autonomy turns out to be science fiction and Tesla cannot produce an autonomous car, ARK estimates that the electric vehicle opportunity alone would boost its stock 2 to 6-fold from $195 today to $560 to $1,200 by 2023. If Tesla does solve for full autonomy, however, and its electric vehicle production surpasses our bear case estimates, Tesla could scale significantly higher than our previous $4,000 price target during the next 5 years, thanks to our newly introduced bull case for electric vehicle volumes, writes analyst Tasha Keeney and Sam Corris. ARK's math, at an average selling price of $48,250, today's average selling price, Tesla's electric vehicle revenue would total $82 billion at 1.7 million units and $145 billion at 3 million respectively in 2023. In the bear case, gross margins would average 25%, which is Tesla's guidance, while selling, general, and administrative costs average 10% of sales, comparable to that of other premium auto companies, even though its overhead should be much lower. ARK also assumes that Tesla will spend 13% of sales on research and development, its average for the past 5 years compared to the 4.3% average of General Motors, Ford, and Fiat Chrysler in 2018. ARK also expects Tesla to reinvest excess cash back into the business to fuel growth. We expect its multiple of EV to EBITDA research and development to reach 8, slightly higher than the 7.3 times average for the auto industry today, despite the superior growth profile of electric vehicles relative to gas-powered cars. Taken together, based on the electric vehicle opportunity alone, these assumptions suggest that Tesla's enterprise value will scale from $47 billion today to $120 billion in our bear case and $250 billion in our bull case, pushing its stock price up from roughly $195 into the $560 to $1,200 price range. ARK expects 26.4 million electric vehicles to be sold in 2023. In 2018, Tesla had 17% of the BEV market. 3 million vehicles in 2023 would shrink its market share to 11%, and a 1.7 million number would be 6% market share. So ARK is of the mindset that Tesla's average selling price will drop as they shift their platform towards more affordable models. Now, shifting over to gross margin, we can see the bull case comes in and clocks in at 30%, and the bearish case comes in at 25%. Shifting over to revenues, we can see how that the number of cars sold or units sold impacts revenues for both the bullish and bearish case. Turning to gross margins, we can see a 30% forecast for the bullish case and a 25% gross margin target for the bearish case. Gross profit for the bullish case is essentially double of that of the bearish case, coming in at $43 billion in 2023 versus $20 billion in the worst case scenario forecasted by ARK. Not only does ARK Invest compute the value of the electric vehicle business, but they also gave us a breakdown and a forecast in the bullish case and a bullish scenario what this business would potentially be worth for Tesla. What would Tesla's taxis actually make for the company? They forecasted that by 2023 that Tesla's taxis could bring in $7.2 billion in revenue. If we look at the bearish case for 2023, they are assuming that Tesla's taxis will never become a reality, and they plug in a zero into their valuation model. model. Based on the sum of parts analysis, ARK Invest argues that Tesla shares in the bullish case scenario forecasted out to 2023 based on the electric vehicle business plus the potential for the autonomous robo-taxis. Tesla shares have an upside potential of all the way up to $5,900 per share by 2023. They are pegging a $1.3 trillion valuation in a bullish case scenario. This is the best case scenario according to ARK Invest. Not only do robo-taxis work out for Tesla, but the company continues to ramp up its vehicle production and its market share. Turning to the 2023 bear case, ARK Invest is forecasting for the shares to trade around $560 per share by 2023 in the absolute worst case scenario. I will post a link in the description if you guys are interested in breaking down, analyzing, and exploring ARK's valuation model of Tesla for yourselves. But remember, a key component of Tesla is the future of autonomous driving, self-driving vehicles. Let's turn over and listen to what Elon Musk has to say about the future of autonomous driving and the creation of chips for autonomous driving for the future of Tesla.
Over there on the right, you see all the connectors for the video that comes in from the 8 cameras that are in the car. You can see the 2 self-driving computers in the middle of the board, and then on the left is the power supply and some control connections. And so I really love it when a solution is boiled down to its barest elements. You have video, computing, and power, and it's straightforward and simple. Here's the original hardware 2.5 enclosure that the computer went into, and we've been shipping for the last 2 years. Here's the new design for the FSD computer. It's basically the same, and that, of course, is driven by the constraints of having a retrofit program for the cars. I'd like to point out that this is actually a pretty small computer. It fits behind the glove box, between the glove box and the firewall in the car. It does not take up half your trunk. As I said earlier, there's 2 fully independent computers on the board. You can see them there highlighted in blue and green. To either side of the large SoC, you can see the DRAM chips that we use for storage, and then below left, you see the flash chips that represent the file system. So these are 2 independent computers that boot up and run their own operating system.
Yeah, if I can add something, the general principle here is that any part of this could fail, and the car will keep driving. So you could have cameras fail, you could have power circuits fail, you could have one of the Tesla full self-driving computer chips fail, car keeps driving. The probability of this computer failing is substantially lower than somebody losing consciousness. That's the key metric, at least an order of magnitude.
Yep. So one of the things that additional thing we do to keep the machine going is to have redundant power supplies in the car. So one machine's running on one power supply and the other one's on the other. The cameras are the same, so half of the cameras run on the blue power supply, the other half run on the green power supply, and both chips receive all of the video and process it independently. So in terms of driving the car, the basic sequence is collect lots of information from the world around you. Not only do we have cameras, we also have radar, GPS, maps, the IMUs, ultrasonic sensors around the car. We have wheel ticks, steering angle. We know what the acceleration and deceleration of the car is supposed to be. All of that gets integrated together to form a plan. Once we have a plan, the 2 machines exchange their independent version of the plan to make sure it's the same. And assuming that we agree, we then act and drive the car. Now, once you've driven the car with some new control, you also want to validate it. So we validate that what we transmitted was what we intend to transmit to the other actuators in the car. And then you can use the sensor suite to make sure that it happens. So if you ask the car to accelerate or brake or steer right or left, you can look at the accelerometers and make sure that you are, in fact, doing that. So there's a tremendous amount of redundancy and overlap in both our data acquisition and our data monitoring capabilities here.
So according to ARK's Tesla valuation model, they are forecasting in the absolute best case scenario, Tesla shares have huge upside potential. They placed a $5,900 price target on Tesla shares by 2023. They're forecasting a market cap of $1.3 trillion. I am highly skeptical of this number, but ARK Invest is very bullish in surrounding Tesla. If we take a closer look at the bearish case, this seems much more realistic to me. The 2023 bearish case does have huge upside for Tesla shares. They are forecasting Tesla shares to be trading around $560 per share. Based on where Tesla is currently trading, that would mean huge upside in the name. I would absolutely love to know your guys' own takes on this. As you know, Tesla is a battleground stock. The stock is highly volatile. It's one of those names that I do emphasize the use of a stop loss. I do trade. I get in and out of the stock very frequently. I am looking for entries in the stock as investors and institutions are panic selling. Let me know what you think about ARK's Tesla valuation model. As always, guys, be sure to smash that like button because it does help me out. Thank you so much for tuning in, and I'll catch you in the next video.